Hey guys, welcome back. So last week we discussed two scenarios, right? Number one, we would either consolidate and break out of this downtrend, or number two, you would kind of have that C wave to the downside, right? Before the market had to move higher. So far you could see that the market chose option two to reject this area and come back to the previous area of demand at 3,900, right? And the market bounced off that area. So this week I'm kind of watching two scenarios, right? Number one is that we have some kind of pre-CPI, right? We just kind of push up until tomorrow's CPI report. If CPI is kind of bad, right? We come down for the C wave to finish out this B wave. Before we do, I still contend, right? Any dip will get bought. And before we push higher towards this C wave up here, right? That's the more bearish bull version. The more bullish version, again, would be you can kind of use this trend line multiple ways, right? To kind of look at multiple resistances. You can see we've had fake breakouts, right? That have gotten rejected. And so we're kind of at a crucial junction, right? You can kind of see right now that we're just kind of hovering over this trend line, right? The only difference is this one just joined the endpoints, right? Versus this trend line also joins the subpoints. So kind of, again, you can kind of see that this red line is the point of control of the volume of the surrounding zone as well. So you can kind of see, again, besides the trend line, this is a pretty important level, right? I'd say below 3910 is kind of the easy drop down to 3750. As long as we hold over this is more, again, if again India's CPI did come in to 11-month low. So I have been tracking India and the US pretty closely, and they have followed each other. So again, this is the more bullish version in case we do, kind of push up during CPI, right? We do have this final B wave to the upside, right? I do think we will not make a new high. We will just make that higher low before we have a very bad 2023. Again, if we go to the weekly chart on this specific chart, right, we can observe that the market pretty much, right, 1, 2, 3, 4, like 100 point 4 week of consolidation. So it kind of makes sense that it did, month of consolidation before it could have another leg higher. So let's kind of see, right? Again, this could be viewed in multitude of ways. And again, we do have this trend line, support in place right here. So if again we do break this 3,900, then it should be a pretty smooth drop down to 3,750. And again, if you are a bear, right? I'm sure you've seen this on many charts where we just reject the trend line and kind of make a new low, but kind of what you can expect in the bear scenario. So it's kind of what I broader view I have for the market, right? Let's look at Tesla. So last week, Tesla didn't pan out, right? We were kind of looking at this channel on Tesla. There'll be a channel here. Yeah, you're kind of looking at this channel on Tesla and thinking that if we were, right, we were hoping that we would break out of 200, right, and proceed higher. But again, you can see that we did reject it like the rest of the times, and we came back again into demand. So I do think, again, Tesla could, as you can see on this chart, right, if I go to like a lower time frame, like the 2-hour chart on Tesla, you'll be able to see that this area right here, 181, is a pretty significant volume shelf. So again, we do know that it has downtrend resistance. So let's just say if it can break over 181, 183-ish, then Tesla should be able to run up to, 200, 215 pretty easily if it does break this downtrend that we were watching, right? Alternatively, again, if it just cannot get over this point of volume control, right? I think Tesla, if it breaks 165, should, come down to 150 and 140, right? Make a new low in this area. So yeah, I am watching Tesla to see if we do break out of the zone. That's stock number one on this week's watch list. The next one is kind of Amazon. I did mention this on the feed as well, right? You can just see that we have just come down again. You can pretty much see how many times, right? 1, 2, 3, 4, 5. 5 times we've held this demand zone. So we are kind of on a very important demand zone on Amazon. And again, considering it's a week with CPI and Fed, which could create large moves, it's a pretty important level to kind of consider, right? So if you are feeling bullish, it is on a massive demand zone, right? And so if we do, right, you can see this is the downtrend for Amazon. And if we do, kind of break over 92, 93, then Amazon, again, kind of like Tesla, will have a nice breakout run to the upside. But if we do, right, have a pretty bad CPI, again, we know this is a very important demand zone. If it were to break 87, it probably comes down to 80 and 75, right? So that would, again, make a nice short. So it's a pretty important zone on Amazon to monitor and could make a good trade in both directions, right? So the next one I have is kind of CAT. And again, this is if we do have a pretty bearish CPI, you can kind of see that CAT does have a gap to fill it, right? Below, right, you can see this is where the demand is, right? The wicks are 226, 225.7, so 226, right? The wicks are here. If CAT were to break 226, it already has like, the gap is at 218, so that's about 8-point move, right? So that would make a really nice short and probably come back into support at 211. So yeah, I think CAT would make a nice short if it were to break down from this channel and into this trend line. So it's kind of what I have, right, for CAT. To be honest, I do see this as a wave 4, so it may or may not break it, right, before it has that fifth wave to the upside. So let's kind of see how CAT moves, right? And the next one I have is Netflix. Again, this is if we do have a very bad CPI, then Netflix would be a really prime candidate, right? You can see that Netflix has been, you can see there'll be a trend line here, and you can draw another trend line here, right? You'll kind of see there you go. This is one channel, right? We did take the short a while ago, so it could be kind of into the same thing where if this channel rejects, right? If it breaks below 317, then it's at risk to come down to like 270s back to the bottom of this channel. Again, you can kind of see a trend line here, right? I'd say 312, 315 is a better trigger to kind of wait for the breakdown. But yeah, again, it has finished filling its gap too. So that's kind of interesting. But again, if it is bullish, and then again, you can see Netflix does have another gap, and it'll probably go up to 500 if we do have a bullish CPI. So yeah, this is kind of the channel holding Netflix back. If it can break above, let's say, this high at 350, right, then I think it's headed for that other gap. So yeah, that's Netflix. And the last one on this week's watch list is actually CRM. And CRM is, again, another overbought, right? Oversold kind of stock in the market. And you can kind of see that we have come into multiple areas of demand on CRM, right? And you can kind of see we are on a demand zone. And again, this trend line holding a support, this again, another pink trend line holding a support, and you can kind of see some sort of Morningstar reversal going through on the daily, and you can see it does have a massive gap, right? This area between 130 and 140 is just a massive shelf. So again, same as Amazon and Tesla, right? If this demand holds, it should very easily be able to push up to 140 and probably the top of this channel 154, right? But if this area of demand breaks down, then again, it should be a pretty easy short because again, you can see it's empty space below. So yeah, these are all the stocks I'm monitoring this week for bullish and bearish moves. So hopefully this video helps. Thank you so much. I'll see you guys next week.